In this video, I'm going to demonstrate assigning costs to jobs in a job order costing system using problem 722 as an example. They ask us to both record the journal entries and then post those journal entries to the T accounts to represent the flow of costs throughout those accounts. Our starting point is number one, where we purchased $80,000 of material on account. And hopefully you recall your rules of debits and credits. For this journal entry, I'm first going to debit materials inventory, which is an asset account. In our intermanagerial accounting cash, you probably use raw material instead, but it's the same account. We can't credit cash because we're not paying cash. It says we're buying on account, so we're going to credit the liability account, accounts payable. Part B, again, ask us to record this and post this to the T account. So I'm going to do this quickly for just this journal entry so far. Materials inventory, why do I have a beginning balance? Because if I look at my table here, it says the materials inventory starts with 148,200. Why is it on the debit side? Because this is an asset. Then I'm going to post my debit on the left-hand side of 80,000. It brings the balance up so far of materials inventory to 228,200. Don't get too excited. We're going to have more entries that affect this account. Accounts payable is a credit. That's going to be on the right-hand side. And so far our balance of accounts payable is going to be 80,000. And we're going to jump back to number 2, where we're going to issue some of that material in the form of supplies. So one important thing to keep in mind here is that supplies are a form of indirect material. So our materials could have been used for a direct purpose or an indirect purpose. Supplies would have been an indirect purpose. Because of that, they're not going to immediately go into work in process. They're going to take a detour, and indirect materials like supplies are considered to be part of manufacturing overhead. So again, instead of debiting work in process, we're going to debit manufacturing overhead. Also, a bit of a difference probably to your intro to managerial accounting class. We just called it manufacturing overhead. Here we're going to call it manufacturing overhead control. Manufacturing overhead control it's a temporary account. It's not an asset. It's not an expense, but it functions in that way, and that it's increased with the debit. The actual cost of overhead are going to be debited to manufacturing overhead control. We need a opposing credit also for $4,000. We're removing it from the asset account materials inventory, so we're going to credit materials inventory. On 3, we're just repeating what we had done in number 1, purchasing $56,000 of material. So our dollar amount's different, but we're also debiting materials inventory and crediting accounts payable. Also this time 56,000 instead of number 1, 80,000. Number 4, we're finally going to pay for the materials purchased in number 1 using cash. So this is a journal entry you should be familiar with from even your intro to financial accounting class. We're simply debiting our liability account, accounts payable, and because we're reducing it for 80,000, and then crediting cash because we're paying out the asset cash. Moving along here quickly. Now we're going to use some additional materials, but this time for a direct purpose. So we're issuing 68,000 materials for a direct purpose. Since it's for a direct purpose, we can debit or increase our inventory account work in process or WIP. And I just have a note here, direct materials, because it's direct materials for 68,000. We're removing it from our raw materials inventory stockpile. So we're going to credit materials inventory for 68,000. Now we've tackled materials, so we're going to move on to labor. In fact, in number 6, we're going to utilize direct labor. Unlike materials, direct labor can take a direct path to work in process. So we're going to debit work in process for a direct labor of 100,000. We're adding in the direct labor to our work in process. And since it doesn't indicate that we paid it, we can't credit cash. We're going to accrue it or credit the liability account wages payable. Our next entry is going to be number 7, and I just cleared a path here because it was getting a bit cluttered up, where we have manufacturing overhead related items. We have several indirect items we're paying for. Utilities, power, equipment maintenance, and other miscellaneous items for the manufacturing plant of 106,000. Because these are indirect costs, they can't take a direct path to work in process. They have to take that indirect path to manufacturing overhead control and debit manufacturing overhead control for 106,000, crediting cash also for 106,000 because we're paying it out. Finally, we're going to apply our overhead. We've been collecting our actual overhead costs in that manufacturing overhead control account. We're finally going to apply it based upon our predetermined overhead rate. They tell us that that's going to be based on taking 125% of $100,000 in direct labor costs. What's the journal entry going to look like? We're going to debit work in process, adding it into work in process for 125,000. This is also probably a difference from what you did in Intro to Managerial Accounting. You probably credited the account manufacturing overhead to remove it, the same account that you added or debited in the actual cost. We're going to do something different. We're going to utilize a separate account called Applied Manufacturing Overhead that's only going to be credited by applied overhead. A lot of companies use a separate control account for the actual costs debited to versus the applied overhead credited to. They use separate accounts. The last journal entry we have, we're almost in the home stretch as far as journal entry, is recognizing depreciation. Also, thinking back to your intro to financial accounting class or even your intermediate financial accounting class, usually when you looked at depreciation, you debited depreciation expense and credited accumulated depreciation. Our entries here is going to be similar. We're still crediting accumulated depreciation for 50,000, but since this is a product or manufacturing cost versus a period cost, we're not going to expense it immediately. It's going to be an indirect production cost, so we're also going to add it in or debit it to manufacturing overhead control. So we have our journal entries. I will note they didn't give us all the journal entries related to what's the cost of product we're finishing, what's the cost of product that we're selling. So first, we're going to post so far what we have as far as journal entries, and I'm going to let you do a lot of this on your own. Keep in mind, again, debits are going to go on the left-hand side, credits are going on the right-hand side. All the entries that affect materials inventory, we've already recorded those, so we can get an ending balance of 212,200. I just got that by taking my beginning balance that they gave me, 148,200. My debit of 80,000 where we purchased material. My additional debit of 56,000 where we purchased additional material, minus my credit of 4,000 for my supplies or indirect materials used, and 68,000 credit or reduction of direct materials added into work in process got us the ending balance of 212,200. We can also calculate the balance of manufacturing overhead control. Also, we added in 4,000 for our indirect materials, 106,000, and an additional 56,000 for manufacturing overhead control of 160,000. Applied manufacturing overhead, we just applied it one time as a credit, so that balance is 125,000. Where we run into problems is some more of our inventory accounts, work in process inventory. They didn't give us all the details, and finished goods inventory, and also cost of goods sold. I'm probably going to start, you probably naturally would have thought, let me try to attack work in process. I'm going to start almost backwards with cost of goods sold. One good thing they did tell us is that the ending balance for cost of goods sold is 263,000. So I know that's the ending balance. And this account's going to be an expense, so that's going to be on my debit or my left-hand side. I don't have a beginning balance in this account because this is an expense that gets cleared out at the end of each year. So my assumption is the only activity that happened in this account is going to be the $263,400. Why do I have a note of finished goods related to this? Because that would have been the amount that was transferred out of finished goods inventory, complete inventory, into cost of goods sold. That's the cost of the product that we sold, or moved from finished goods to cost of goods sold. So I can move over here to finished goods and say, well, this must have been the credit to finished goods, because that journal entry would have been a debit to cost of goods sold as an expense and a credit to finished goods, again, transferring it out. I'm getting a little bit closer in detail to my finished goods. I can solve for how much was added into finished goods for the period. I'm already told the beginning balance is 166,000. I'm already told the ending balance is 143,000. We 143,200. We just figured out the amount transferred to cost of goods sold is 263,400. So I can start out and just solve for goods completed. It must have been 143,200. That must have been our debit into finished goods or goods completed. So I'm getting a little bit happier here. The last thing is I have some detail I need to fill in for work in process. Well, what comes, where do the units come from? They get added to finished goods of 240,600. They get taken out of work in process, so they're no longer incomplete units and get added into finished goods. So our credit up here to work in process inventory must have been the amount, or what we call cost of goods manufactured, or the dollar amount transferred from work in process to finished goods, the amount of complete units. Now that I have the credit to work in process of 240,600, I can take my given beginning balance of 33,000, the amount I added in 68,000 for direct materials, the amount I added in 100,000 for direct labor, and the overhead applied 125,000, and I can finally get my last answer. The ending balance for work in process must have been 85,400, and I'm finally complete.